Hello everyone, my name is Yijia Tang, studying in Fordham University. Today I perform a presentation about my research on Facebook incorporation. Based on my overall research report, I recommend investors to buy or hold Facebook stock. Why? I explained the reasons from 4 parts, including business, industry overview and competition, valuation, and risk-reward analysis. You know, Facebook is a company to provide a platform to enable people to share and connect with each other all over the world. The important products include Facebook, Instagram, Messenger, WhatsApp, and Oculus. Its revenue mostly stems from the advertising revenue, driven by selling advertising placement to marketers. Well, Facebook belongs to the Internet software and services industry. Actually, the industry is attractive for investors. From the graph, apparently, the industry is developing fast in recent years, and the stock rate of return over the last 5 years is about 180%, much higher than the Standard & Poor's 500 index and the Nasdaq Composite Index. Although there is some possibility of slower growth from 2016 to 2017, we can foresee that the industry will still perform better than the average in stock market. Regarding to the competition analysis, Facebook is faced with intensive rivalry. I used the portal's 5 forces to analyze the competition position. We can see that the barriers to entry is low. The suppliers are not differential to companies. The buyers are price sensitive and are easy to run off, and there are so many substitutes. Above all reasons, explain why Facebook is exposed to a high competition threat. And then I used the DCF model and enterprise value to EBITDA multiple model to estimate Facebook equity value. According to DCF model, I assume 10% as weighted average cost of capital, 8.9% as growth rate of free cash flow after 2020, and 23.8 as exit multiple. And after the calculation, the estimated price per share is from 127 to 131. Obviously, the price of Facebook nowadays is undervalued. Using the enterprise to EBITDA multiple model, I choose 28 as fair target multiple, and to estimate the equity value. And the fair price per share is about $131. Likewise, Facebook is also undervalued using the relative valuation. And In addition, I think that 28 is a fair target multiple because Facebook will grow faster compared with other companies and the overall segment or industry. And Facebook focus on creating better their business and attract more mobile users, advertisers using its products. And finally, Facebook continues to work on creating some breakthrough products to improve their performance and quality of its products. And then I analyze the risk and reward of Facebook. Well, you can see that if the United States economic recovers strongly, Facebook price may go up to $165. But if the economic goes down, the price may decline to $99. And there are some other potential catalysts and risks impacting on Facebook business. I find 4 incentives, including entering into mobile payments and other fees business, attracting the advertisers and publishers on instant articles, and higher gross margin and operating margin, and broadening the customer base in the future. And Facebook also faced with the potential risks, including the new products and changes to existing products. It is so uncertainty to attract or retain users. And the next risk is higher competition threat in the future. And then the risk of law and regulation, the risk of slower growth rate, increasing costs, the uncertainty of the economic development, and the risk of foreign currency exchange changes will make some negative impact on Facebook business. Above all, I still believe that Facebook should be overweight in the portfolio for the following reasons. First, Facebook will continue to grow in the foreseeable future. Second, Facebook has the ability to improve its platform to attract more users. And third, Facebook focuses on expanding its diversification and growth of revenue sources beyond advertising on Facebook. Finally, 13% upside to the base price per share based on 28 multiples 2070 expected EBITDA. So, for above all reasons, Facebook is actually worth to invest. That's all my presentation. Thank you.